Hi, it's Ian and this is your Friday weekly market wrap-up video. It is the 6th of June 2025, just coming up to 9:30 in the morning in the UK. Obviously today, a very important day for traders and for market sentiment. We've got the US non-farm payroll data, that's the employment data out of America. We've also got some Canadian figures as well, so I often look at the US dollar against the Canadian dollar as a potential sort of double whammy trade for the first Friday of the month. We're going to break down different currency pairs. We're going to start with DXY, which is the US dollar index. We're going to look at the long-term picture, short-term resistance, short-term patterns. We're basically using the long-term picture to try and work out where we are with regards to formations, whether or not we're counter trending or actually looking for prolonged trends. We've got some interesting patterns forming in the euro dollar, dollar yen, sterling dollar, potentially gold. So I'm expecting some high volatility over today's figures. So just to highlight what we're expecting the non-farm payroll data to come in at a build of 130k, so that's 130,000. The last print was a build of 177,000. Now my analysis suggests that we could see a move higher in both US indices and the dollar index, so that would probably suggest that we'll see a slightly better than expected data point today. Let's get to the charts. So the first chart that I want to look at is the DXY, which is the dollar index. Just in case you haven't seen my videos, again, I'll highlight what's going on here. We've got middle bottom is a monthly chart and a weekly chart, daily chart, 8-hour, 2-hour chart and a 1-hour chart. We've also got an indicator on here. It's called a Trend Predator Pro. I use it for short-term setups to try and highlight basically breakouts and confluence. So it tells me where I should be on a long-term picture, like a monthly picture, weekly picture, an 8-hour, then an intraday outlook. We'll explain that a little bit more in depth in a while. So we've been concentrating on this chart. So this is the weekly chart for DXY. We can see 5 waves to the downside, 1, 2, 3, 4, 5. That highlights that we're in this choppy and corrective ABC formation to the upside. Price action, as you can see by this weekly chart, let's just get rid of this for a second. You can see spikes in both directions. So what do we see here? We see strong candles, okay, solid candles as we move lower. What we see here is just spikes in both directions. In fact, for 4 weeks, we only closed with mild net gains. And we had this big sell-off, then mild net gains again last week. And then this dip has been bought into this week. Quite interesting if we go to the daily chart. And this is all sort of analysis to try and get the big picture. Okay, so the daily chart, what do we see? Well, we see choppy price action. So 1, 2, 3, 1, 2, 3. 3 wave patterns are normally corrective, so that should indicate really that the next move is to the upside. What did we get yesterday? Well, we got a doji style candle. What will we get today if we get a high close in DXY? This 3 candle formation will be a morning doji star pattern that is often seen at the base of a trend and the start of a new upward bias. So potentially the medium term bias, if we got a high close today, could flip to the upside. Technical analysis, get out there, could, should, all these words that technical analysts use. Right, so break down to the shorter time frame. So basically a high close around here which is 98.94 last swing high, would give us that morning doji star pattern on the daily chart, and then in turn that should highlight a bullish bias. But what do I have? These dashed black lines are my bespoke resistance and support levels. So it acts as support as it breaks through, it acts as resistance. So there's ample scope to move up to this level, perhaps consolidate around there. But I think the sort of big picture analysis, let's just get the right tool, is going to be something like this. So coming down, this was left shoulder support, head, right shoulder. So if I close the day up around these levels, then I think there's ample scope to move lower to then form a bullish reverse head and shoulders pattern. What we want to really see at the base of a trend is a reversal formation. So not just higher highs and higher lows, we really want to see a strong pattern. A reverse head and shoulders pattern is strong, and an ending wedge formation is strong. Okay, when you see these patterns, they have between a 60 and a 70% chance of playing out. Why do I like them? Because not only do they show reversals, but they also show you something called a measured move. So we always, when we're trading and when we're analysing the markets, we need to plan the trade, and we then need to trade the plan. It's a mantra that a lot of people use. Okay, if we don't have a plan, if we just have a bias, i.e. I've got a bullish bias, but I don't have a target, I don't have an entry level, and I don't have a stop loss, that is not a trade plan. Okay, what we have here, or what we might have here, so reversing lower, trying to get long on the right shoulder, okay, and always looking at risk reward. Then we have a measured move target. So the measured move target, and of course I don't know where the neckline finishes yet, but the measured move target is basically from the head to the neckline and projected from the breakout level, and then that would give a measured move target up here, just over 100. Okay, so what I do, annotate charts, measured move, it's actually 100.02. Okay. Why is this important? It's important because if I'm trying to buy the right shoulder, I have a target level, I have a stop loss because it's underneath the head, I have a risk reward factor. So I'm planning the trade, I'm trading the plan, I know what my entry is, I know what my stop loss is, I know what my target is. I've got a plan. So just to highlight what we've talked about with regards to DXY, and of course it's the dominating factor for most major pairs, is that we have scope to build an evening doji star pattern. However, the preferred outlook, because we've got some intraday resistance at 98.60, is actually to buy into that right shoulder and take the dollar higher. So that sort of says to me at the moment we should be seeing a positive result for non-farm payroll. It's giving a bias. Okay, it's not one that I particularly trade on. I prefer to watch the formations complete and then trade, instead of sort of gambling into the figures. So let's have a look at some dollar related products, obviously starting with euro dollar. So this is basically what I'm interested in, this sort of 2 hour chart. Again, if we want to go down to the left corner and look at the weekly chart, it's just a reverse of DXY. So 1, 2, 3, 4, 5, now in this choppy corrective formation to the downside. But really we should be looking at shorting opportunities. That's important. Okay, we want to be trading with the trend. Okay, what do we have here? Well, we've got a bullish channel formation. Okay, we've made a head. The majority of yesterday's initial daily gains got sold into. We're breaking out of this channel formation. What often happens when we see breakouts of patterns, especially wedge formations and channels, we retest the breakout level. Okay, So here we're breaking out at the breakout level. I've got a previous swing low at 113.57. I've got bespoke support located at 113.62. I've got a previous swing high located at 114.55. It's important to annotate your charts so you really know where you are, what you're looking at. Reverse, so I'm getting my correlation, I'm getting my bias from DXY. So rallies to be sold in DXY should mean dips to be bought in euro against the US dollar. Got a confluence zone down here, 113.62, 113.57. If we bounce from there, I'd look for a retest of the breakout level. So a retest of this channel breakout. I'm better off actually making that a little bit darker so we can see it better. And I believe it could be quite close to this previous swing high, so 114.55. So move down, form the neckline, move up, hit the right shoulder, move to the downside. And again, when we're looking at big picture analysis, which side do we want to be trading on? Well, we want to be trading on the side of the trend predominantly. Okay, so that means selling into the right shoulder, not necessarily buying the dip at 113.62, although I do believe it will be quite strong. What do we have on here? Well, previous fake out high, continuation, low hanging fruit. So it's actually giving an immediate negative bias to the downside. When we look to the monthly, free longs, what does that mean? Well, that means that we've actually had a continuation of upward trend, and that's actually a bearish signal. So it's telling me that we're overstretched on the monthly chart. So again, medium term bias is bearish. The weekly bias is bearish. So it's giving me all of these different sort of indicators within my analysis. So the immediate bias is bearish down towards 113.62. The medium term bias is bearish, so really I should be selling into rallies. Sterling dollar is a similar picture. I've just got it on a different chart. Okay, so here I believe we're moving lower in morning trade in this third leg of a bearish Elliott wave count. I've got support at 134.85, previous support 134.92. I like it when we get these confluence zones. Previous resistance potential to be a right shoulder at 135.60. So this is mirroring, this is giving us a mirror image of the euro dollar and of course DXY in the reverse mirror, if you like, correlation. So expecting the dip to be bought after the fifth wave, then a choppy correction to the upside, maybe a reverse trend line resistance hit, maybe not. So that is sterling dollar and euro dollar. I want to talk about dollar yen. So what should happen with dollar yen? Well, dollar yen should move to the upside. If we get a positive figure with regards to non-farm payroll, then we want to be buying the dollars because it's strong. Okay, that means selling the euro, selling sterling dollar, and we want to be selling the Japanese yen because that's a safe haven product. Okay, so that is basically this currency pair is the one that's more likely to move the most over non-farm payroll. What I don't particularly like of just calling a straight call to action is that we're mid-range. Okay, earlier in the week I noted this level 142.70 as prime support. We just ticks a few ticks lower than that, and then we move to the upside. That's really where you want to be getting long, not sort of mid-range. Trouble with sort of taking a mid-range trade, and it depends what you use for your stop losses and your targets, but you know, it's just risk reward is appalling. 1.2. I've also got some resistance at 143.97. What I like to see in these CD legs is 5 waves. Okay, so 5 waves to the upside, 3 waves to the downside, 5 waves to the upside. Completes a 5-3-5 sequence. A 5-3-5 sequence, as far as Elliott Wave is concerned, is a corrective sequence. Okay, so what I really would like to do is actually buy a dip in dollar yen. So basically, this being wave 1, down in 2, up in 3, down in 4, and then up to 5. The system trade setup, this is going back to the Trend Predator Pro indicator. The system trade setup would be actually to sell into this completion. It will be a free long on the dailies, so highlighting that we've had 3 positive days in succession, and that normally dictates that we get exhaustion. So just to talk about this currency pair, the bias is bullish, but the preferred trade setup would be to buy onto a dip, or into a dip, I should say. Dollar CAD is continued to drive lower. We can see here, let's just expand a little bit. Okay, 5 waves, so wave 1, wave 2, wave 3, wave 4, wave 5. So again, we're getting a similar picture to DXY, we're getting a similar picture to the euro against the US dollar. Picking a bottom is never easy, but okay, what do we have? This is important. From here. So I like ending wedges. So we're forming an ending wedge pattern. So even though we continue to grind to the downside with lower lows and lower highs, what is happening is that the move to the downside is losing momentum. When we lose momentum in a trend, then we will often form an ending wedge pattern. The beauty of an ending wedge pattern, as I've said before, is that it gives you a target level. So the target level on a breakout is the start of the wedge, which in this case would be at 144.15. So trying to catch this base, and by the way, you're probably going to make like a reverse head and shoulders pattern and what have you. But if you are a medium-term swing trader and you don't mind the carry, then you can hold on to a long trade towards 144.15, or you can play it with a bias. So in other words, the medium-term bias switches to the upside. I'm now looking for longs, and if I do trade short, I'm going to trade short in a small amount or smaller amount. I'm going to risk less of my trading capital because I know it's counter trend, and I'm not going to be greedy. Today, or yesterday I should say, we posted a doji style candle. Why is that important? Well, two reasons. First reason is that it highlights indecision. Okay, we open and close at the same level, so nobody is dominating the market. The dip has been bought, the rally has been sold. Nobody is in control. It highlights indecision. Okay, what happens if we get a high close today? And I'm talking about sort of 137.35. That indecision turns into a morning doji star pattern. A morning doji star pattern is often seen at the bottom of the trend at the start of a new upward bias. Why is that important? Because if I'm a swing trader and I want to get long, then my stop loss is below the doji, so below 136.33. It negates that candle. That candle would be blown out of the water if we break below. So this time frame gives us a mild bullish bias. Okay, then moving on to this time frame, what do we want to see? What we normally see at a reversal is 5 waves down and 5 waves up. Okay, so normally what you see in Elliott Wave is 5 waves up, 3 waves down, 5 waves up, 3 waves down, because that is the sequence. But when we get to the top or the bottom, we don't get 5 waves up and 3 waves down. We get 5 waves and 5 waves, or at the base we get 5 waves and 5 waves. Okay, so what will normally happen is we get 5 waves down, okay, and then 5 waves up. I've got resistance located at 1.3765. Why is that important? Because I'm looking for a reverse pattern. Okay, so I'm looking for this to play out. Okay, just get rid of that for a second because I don't want to confuse everybody. So I'm looking for this to play out. Why is this important? Because again, I'm looking for that reverse head and shoulders formation. So left shoulder. Give me a neckline, give me wave 2, and then a move to the upside. Okay, where do I want to be grabbing it? Well, not really here. I don't believe that this is a bit of a breakout because I've got my resistance level up here at 1.3765. I think what's going to happen is we're going to move slightly higher with DXY, but then I think that rally is going to be sold into. I don't know that that rally is going to be sold into, by the way. It could just project all the way up to this resistance level. But if I buy it at the market now, my risk reward is poor. And this is again just going back to sort of planning the trade. So if I buy it now, I'm targeting that. I've got a stop loss below the low, 1.8. I don't want to trade anything below sort of 2.5, 3. If I can get up to 5, 6R, then that's fantastic. Okay, watch this. If I move this down to the previous swing low, 5.3. Okay, so it suddenly becomes a poor trade, and it suddenly becomes into a reasonable trade plan. So it's very, very important that we don't just buy breaks, and that's another reason I don't like buying breakouts. So a lot of people sort of look at just swing highs and swing lows. The trouble is your stop losses are massive. What you're better off doing is looking for retests or trying to work out. What I try to do is always try to work out where wave 2 is going to be, or I like to trade wave 5. So wave 2 to get the projection up to wave 5, or wave 5 to get the correction to the downside. But sort of mid-range, I really struggle with decent R rates. So let's have a look at gold, which is not one of my favourite products. Obviously get asked gold analysis hell of a lot. Retail traders have a real fascination with it. Look at all these products on the right hand side. I just look for the best one, or what I consider to the best one, and it's got a sort of 1 in 50 chance of being the best product, so I struggle to see the fascination. Anyway, we're trading within an ending wedge pattern and has an eventual bias to break to the downside. What is my bias at the moment for euro dollar and sterling dollar? Well, at the moment it looks like they're going to move lower, but a dip's going to be bought. Really, gold should be very similar because we've got that correlation with DXY. Okay, we've got a correlation with risk on, risk off. We've got correlation with 10-year. This is why it's so confusing. Okay, but it looks. I've got some support located at 3,328. I've got a previous swing low located at 3,331. I've got a measured move target of 3,245. Where am I at the moment? I'm just mid-range. Okay, so if I bounce from here, again, similar to the other products that we've talked about, euro dollar and sterling dollar, if we bounce, we might retest the wedge breakout in this scenario. That could then potentially be the right shoulder. That then gives us 2 target levels. So it'd give us the measured move target for the wedge breakout, the head and shoulders breakout, and of course that's not confirmed yet, but it'll be down around here, 3,252, and it would also give me a wedge target of 3,245. Again, not for fear of sounding like a broken record, but we can then plan the trade and we can trade the plan. And again, this sort of hitting the right shoulder or trying to hit, take the short trade close to the right shoulder, the retest of the wedge breakout would then give you a risk reward factor of around about 4. Bitcoin quickly, because this has actually been quite interesting of late. Some pretty mixed and volatile price action, okay, in Bitcoin. Let's just get it down to a short time frame. I've got support down here at 99,520 ish. The big numbers, okay. It's not going to be pit perfect. What do I see? Inside patterns 1, 2, 3. Okay, 1, 2, 3 at the moment. In fact, I think that's there. So inside patterns are in 3 waves. 3 waves of corrective. Okay, so this looks like an expanding wedge pattern. It has an eventual bias to break to the downside. Sorry, to the upside. Measured move target being the previous swing high at 112,000 on the dot. That one. So what can I see potentially happening? Well, remember we've still got the correlation with the dollar. Okay, so if the dollar moves higher over these figures, then Bitcoin should move to the downside. If it moves to the downside, then I believe we've then got scope to build this pattern here, which is known as a back formation. So dips being bought, then a rally up towards sort of 106,000, then a correction to the downside could be limited, and then a move higher towards this level here, which is 110,640 ish. So at the moment, again, with this being one of the dashed lines, the preferred stance would be to buy into dips. US 30. Okay, there's, I don't know what that's doing there. Let's get to this time frame. There's a really good book out there, and it's called Trade What You See. And I just like the title, but it's also about cipher pattern analysis, which I particularly like. What are we seeing? Well, we continue to see higher highs. Okay, so these dips are being bought, but we're struggling to break through this previous swing high at 42,717. Okay, this was my bespoke support level yesterday, 42,190. The dip lower got to 42,203, so 13 ticks short of that support level. But what do I see? I see higher lows, and I see a resistance level. So that tells me that these dips keep on finding buying interest. This chart formation has a bullish bias and has a bias to break to the upside. If we can clear this previous swing high, which is at 42,717, then the measured move target is 44,331. I'm not trying to curve fit this. In other words, I'm not trying to make an analytical report to look like a bias that I want to see. Okay, this is what I see. I see higher lows. I see a resistance level. So this would also sort of correlate with a good print on the non-farm payroll, or a better print than is expected. Big picture analysis, there's no sort of cipher patterns, there's no ending wedge patterns on US 30 or any of the other stock indices. There's no clear indication that the rally is coming to an end. So I think on a bias basis, then I think the bias is to break to the upside. It is not a product that I am trading US 30. Okay, what I am trading, or I'm going to trade, the only thing I'm short of at the moment is nat gas, but what I am looking to trade is sterling dollar, euro dollar, the potential to buy $yen if we do see a dip, and US dollar against the Canadian dollar for a big picture analysis. I hope that's all made sense. All the very best of luck over today's non-farm payroll data. Have a great weekend. Try and get some time away from the charts. I, for one, will definitely be doing that. But a very busy weekend. Rugby club black tie do tonight, which I've never been to before. Golf competition, and then an evening at the golf club tomorrow, and then a family get together on Sunday. So I would definitely be staying away from the charts.
Hola Prime, trade with transparency.